Here's a question for you. If you could take $100 today and turn it into $1,000 or more, would you? Many people think investing is only for the wealthy, but in reality, anyone with $100 can begin building wealth. The key is knowing where to start and what strategies to use. This guide will show you exactly how to make your first $100 work for you, even if you're a total beginner. Why start investing with $100? The biggest hurdle for most people isn't the amount of money, it's starting. $100 might not seem like much, but small amounts invested wisely and consistently can grow into significant wealth over time, thanks to the power of compound interest. The earlier you start, the more your money can work for you. Step 1. Understand your options. There are several beginner-friendly ways to invest $100. Fractional shares platforms like Robinhood, Fidelity, and Stash allow you to buy fractions of expensive stocks like Apple, Tesla, or Amazon. Instead of paying hundreds or thousands for a single share, you can invest whatever amount you have. Exchange-traded funds, ETFs. ETFs are an excellent way to diversify your portfolio with a single purchase. With $100, you can invest in ETFs like SPDR/S&P 500, SPY, or Vanguard Total Stock Market ETF, VTI, which track the overall market. Robo-advisors apps like Betterment and Acorns automatically invest your money into a diversified portfolio based on your goals and risk tolerance. This hands-off approach is ideal for beginners. High-yield savings or CDs. If you're looking for ultra-safe options, consider high-yield savings accounts or certificates of deposit, CDs. While these won't generate high returns, they're a good place to park your cash while learning about other investments. Cryptocurrency, high risk. If you're comfortable with risk, $100 could get you started with Bitcoin, Ethereum, or other digital currencies. Use trusted platforms like Coinbase or Binance to avoid scams. Step 2. Set clear goals before investing. Decide on your objective. Are you saving for retirement? Consider ETFs or robo-advisors. Want to build wealth faster? Look into fractional shares or real estate crowdfunding. Curious about alternative investments? Explore crypto, but limit exposure to a small percentage of your portfolio. Step 3. Leverage compound interest. Compound interest is your best friend in investing. By reinvesting your earnings, your money grows exponentially over time. For example, invest $100 per month in an S&P 500 ETF with an average annual return of 8%. In 20 years, you'd have nearly $60,000, and in 30 years, over $150,000. Common pitfalls to avoid: overthinking your first step. It's better to start small and learn as you go than to delay for perfection. Falling for high-risk schemes. Avoid get-rich-quick schemes or unregulated investments. Stick to trusted platforms and strategies. Neglecting emergency savings. Ensure you have 4 to 8 months of living expenses saved before committing to long-term investments. Answering the opening question: so, what's the best way to turn $100 into more? Start now. Whether you invest in fractional shares, ETFs, or even a robo-advisor, your first step matters more than perfection. Remember, small, consistent investments can lead to big rewards over time. Like this guide? Subscribe for more investment tips and share this with friends who are ready to grow their wealth.